Good morning. So today we're going to discuss about income from salary. Myself, Dr. B. Jagdishwaran, Associate Professor and Head, Indian Research Department of Commerce. During your second MCOM, you have a paper called Income Tax Law and Practice. Under Income Tax Law and Practice, one of the chapter what we're going to discuss is income from salary. In income from salary, we have five heads of income, which you can see from the screen. Income from salary, income from house property, income from business or profession, income from capital gain, and income from other sources. These are all five heads of income. Any person in the world can earn income by these five ways. So they have different types of business, entrepreneurs, or when you working under a person, any means you get income means that will be clubbed under this five category. One is income from salary. A person who started earning from an employer, they'll be getting income from salary. Income from own property, a person have his own houses and it has been used for their own use. That is called self-occupied. That time they will not get any income. If the same house has been given for rent, which is called let out, then they will get an income from house property. The third category is called income from business or profession. Any person doing business or any person by profession like chartered accountant, lawyer, engineer, doctors, all comes under the category of profession. And income from capital gain is there. And by transfer of asset, by sale of assets, properties, they will get income from capital gain. And the fifth category, when any income which will not fall under the first four category, it will go to income from other source. That is called the heads of income. And coming to income from salary, the section what we're going to discuss in income from salary between section 15 to section 17. And the meaning of income from salary already we have seen. And from the screen, you can see what is the definition of salaries. Any remuneration received by an employee. So there are two persons involved in a transaction, employer and employee. A person who getting a salary income is called employee. A person who giving the money is called employer. So here the definition is very clear. Any remuneration received by an employee in consideration of any services rendered to his employer is called as salary. And salary is not an income. It's a club of it's a combination of different income like basic salary, DNS allowances, house rent allowances, provident fund, profit value of salary. So many combinations will be called as salary. So salary, it's a combination of different income, which is called gross salary. And coming to the computation, so usually we say calculation. Coming to income taxes, we say computation. Computation of income from salary have this kind of categories. First, you can see basic salary, bonus or commission, and we have different types of allowances. In the coming slides, we're going to see what are the different allowances. Per Q side, some category of persons, some directors or high level people will get addition to their salary, they'll get extra benefit like providing a bungalow or car along with a driver or payment of mobile bill by the employer or club bill, any other extra advantages which is given to an employee, some specific employee, that will be called as perquisites. And profit value of salary, any arrears, any pending or salary you're receiving in advance. So that will all be clubbed into this income from salary. And sometimes after the retirement also, usually government employee will enjoy this benefit. And apart from government employees, some of the private employees also enjoying this facility, which is called retirement benefit. One among that is gratuity, pension, and leave and cash. So this is also a part of salary. And when you add all the emoluments, what you get from your employer, that will be called as salary, which is called gross salary. From gross salary, you are eligible to deduct anything. Means we have a section called under section 16. We have a deduction. Usually, we have three deduction which can be reduce your income from salary. One is standard deduction. It is fixed deduction for all the employees. Professional taxes paid. The government, we pay professional taxes. So any payment of professional taxes by the employee, you can reduce from your gross salary. And one of the other deduction is called entertainment allowances. So only this allowances is eligible by government employees. So deduction means you have three deduction under section 16, standard deduction, entertainment allowances, and proportional taxes. And entertainment allowance is only applicable to government employee. So after reducing the gross from the gross salary, if you reduce deduction, you'll get net salary, which is called as income from salary or uh, income from salary. And we have a different type of provident fund: SPF, RPF, URPF, and CPF. And coming to the PF calculation for the current assessment year, up to 12% of salary will be exempted. Exempted means you don't have to pay taxes. So up to 12% of salary, it is exempted. About 12%, you are receiving provident fund from your employer. Contributions to the provident fund is about 12%, which is taxable. So that is why it is mentioned very clearly, exempted up to 12% of salary. And the provident fund will give you the interest also. So it depending upon the provident fund, depending upon the state, you will get the interest up to 9.5%, except the current assessment year. Till 9.5%, you don't want to pay tax. Above 9.5 only, you have to pay taxes. That will be clubbed into your income. And we have different types of allowances. Usually, we can categorize these allowances into three categories. One is fully exempted allowance, fully taxable, and partially taxable allowances. So majority of the allowances will fall under the third category, which is called partially taxable. For example, we're going to see HRA. HRA is a separate calculation. We will expect some problem from HRA calculation alone. And entertainment allowances for government employee, helper allowance, uniform allowances, and all partially taxable. And coming to the second category, we have educational allowance, conveyance allowance, traveling allowances. One allowance is missed there. We have hostel expenditure allowance is also there. So that is all partially taxable. Partially taxable, some up to some extent it is taxable, and to the balance extent it is not taxable. And coming to HRA calculation, HRA stands for house rent allowances. House rent allowance is taxable, but they have an exemption. Up to this limit, you don't want to pay taxes. When we calculate HRA, we have to consider the states, and among three, which is the least one, we can reduce from the HRA received. So usually the form will be actual HRA received less least of the following. Under the least of the following, we have three categories. One is actual HRA received. Second one, rent paid minus 10% of salary. Whenever you're staying in a rented house, you're eligible to receive HRA, and you have to pay rent. The second list of the following is rent paid minus 10% of salary. Whatever the rent you paid throughout the year for the 12 months, minus 10% of salary. Here, salary is very important. Salary will be calculated for different purposes. For HRA calculation, salary means basic salary, DA forming, and commission on sales. And here you can see from the note itself, salary is equal to pay A enter. Enter means forming part, which will enter to a service benefit. It's called DNS allowance forming part, plus commission on sales. Usually, simple commission is given. We will not consider the commission. It is commission on sales. You're supposed to consider that as a salary for the purpose of HRA calculation. And third one is called 50% of salary or 40%. So some situation you have to take 50% of salary. In some of the situation, you have to take only 40% of salary. When if it is a metro city, metro city means Chennai, Mumbai, Calcutta, and Delhi. If the problem mentions the place of the person, the assessee, the person who is going to pay taxes called as assessee, if the place of the person is given like Mumbai, Calcutta, Chennai, and Delhi, you have to take 50% as a third calculation. In all other city, if place is not mentioned or apart from this four place, what I mentioned earlier, you have to take only 40% of salary. Among these three, which is the least one, you can reduce from the taxes. So once again, I'm recollecting it. Actual HRA received, less least of the following. Among least of the following, one will be actual HRA received itself. Second one, rent paid minus 10% of salary. And third one will be 50% of salary if they are staying in a metro city. And other than metro city, it will be 40% of salary. Among this city, which is least, you can reduce from taxes. So what we discuss is HRA calculation. HRA stands for house rent allowances. And coming to the second allowances, and which is applicable only for government employee, which is called EA. EA stands for entertainment allowances. Among entertainment allowances, you have three options. Whichever is least, you can reduce from taxes. Among three, which is the lowest amount, which is the least part, you can reduce from your taxes. And the previous screen I showed you. So here you can see less deduction under section 16, standard deduction, entertainment allowances, and proportional taxes. We're talking about the second one, which is called entertainment allowances. Coming to the entertainment allowances, as I said earlier, among three, which is the least one you can reduce. Either actual charity received, actual entertainment received. First, one among that. Second one will be maximum limit is 5,000. Notified limit is 5,000. Third one, 20% of basic salary. The calculation is very clear. The word is very clear. 20% of basic salary. See, for HRA purpose, salary is different. So salary, we consider three things. Basic salary, DA forming, and commission on sales we have considered. That is only for the purpose of HRA. Coming to EA calculation, we have to take only basic salary. So only basic salary word will be there in the question itself. We have to consider that. So among three, which is the least one, you can minus from your gross salary, actual EA receipt or 5,000 or 20% of salary. Among these three, which is the least part, you can reduce from your tax. So as of now, we completed two allowances. One is HRA and second one is called entertainment allowances. And the third and very important one is called rent-free accommodation. And rent-free accommodation and HRA both together will not come. Either a person will receive HRA or rent-free accommodation. We shortly call it as RFA. As I said earlier, some specified employee, some categorized employee have the benefit, have some privilege comparing with other employee. That's called perquisites. So rent-free accommodation is one of the perquisites, one of the perquisites. So rent-free accommodation is nothing but a bungalow or a house along with furniture, all other things has been provided to some employee, then it is called RFA. So when it comes to rent-free accommodation, we have two kind of rent-free accommodation, furnished and unfurnished. Furnished means along with furniture, you don't want to buy anything. All the things will be available. So your TV, air condition, and cooking vessels, everything will be fridge, furniture, so all will be provided. That is called furnished accommodation, rent-free accommodation. Unfurnishment, without this furniture, only house will be provided. Only the house has been provided by the employer, then it is called rent-free accommodation. And coming to the calculation part, if it is a central government employee, the problem mentioned, the person is a central government employee, license is fixed by the government is taxable amount. So how to get the tax mean? If it is a central government employee, license is fixed by the government. I will mention the question itself. You have to take that as an rent-free accommodation amount which is taxable. In all other cases, that is private employee who receives rent-free accommodation, we have to see the population, in which place the person is located, in which place the person is staying. So three category of population. Population is below 10 lakh. So the person who stays in a place where the population doesn't exceed 10 lakh, 7.5% of the income is taxable. Income means we're talking about salary. Again, salary is equal to your basic DA forming and commission on sales to consider. And if the population is exceeding 10 lakh, but not 25 lakh, between 10 to 25 lakh, 10% of the salary is taxable. And coming to the third category, population exceeds 25 lakh, what is a taxable RF payment? 15% of salary. So here we have to remember three conditions. The population is below 10 lakh, the tax payment for RFA will be 7.5% of salary. If the population is between 10 to 25 lakh, the amount of payment to tax will be 10% of salary. If the population exceeds 25 lakh, the tax will be 15% of salary. Again, and salary is equal to basic salary, PA forming, and plus commission on sales. And any amount paid by the employer minus this 15% of salary or 10% of salary, as the case may be. So sometimes I receive 30,000 as an rent-free accommodation. How much of exemption I can claim in? That person with, as I said earlier, 7% or 10% or 15% based on the population will be reduced. That is called exempted from RM. Okay. So coming to the next one, gratuity. So gratuity is nothing but a gift. So it's a gratitude for an employee who work for a longer years in an organization, he will he will eligible to receive gratuity, and the section falls under 10 subsection 10. And usually we have to calculate into two category. If it is received by a government employee, if it is received by a non-government employee. If it is received by a government employee, it is fully exempted. You don't want to pay taxes to the government at all. You don't want to pay taxes to the central government. So income tax authority is giving exemption for government employee for the receipt of gratuity. If he is a private employee, again it has to be split into two parts. Private employee who covered under the Gratuity Act, private employee who's not covered under the Gratuity Act. And the Gratuity Act is mentioned in the screen itself, which is 1972. And you don't want to bother. In the question, they'll specifically mention whether covered by Gratuity Act or not covered by the Gratuity Act. If it is covered by the Gratuity Act, you have to see three options. One is actual amount received or maximum notified amount of 20 lakhs. A third is 15 days salary, 15 days lost drawn salary into the number of years completed services. So among these three, which is least is exempted, which is least is exempted. In other cases, that is, if the employee is not covered under the Payment of Gratuity Act, what are the three options? Same first option, actual amount of gratuity received. Second option also same, which is 20 lakh. The third option is different, half month salary. Instead of 15 days salary, here they have mentioned half month salary into the number of years completed service. Here you want to remember the number of years completed service. The part of the month you should not consider. For example, 11 years and 6 months. You will not consider 6 months. You have to take only the 11 years. Whereas if it is covered by the Gratuity Act means the excess of 6 months is to be rounded off. For example, 11 years and 6 months, it should be counted as 12 years. Okay. So this is what we have discussed for today. We know what is salary and what is the computation part. And we learn HRA, entertainment allowances, RA parent accommodation, gratuity.